Preparing for a custody operations and asset servicing interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each one, you'll see what the interviewer is testing, the core concepts you should cover, and a sample answer. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does a custodian do? And how does custody operations support institutional clients? The interviewer wants to assess your basic understanding of the custody model, safekeeping of assets, settlement support, record keeping, asset servicing, and the role custodians play for institutional investors. While answering, focus on safekeeping, trade settlement, corporate actions, income collection, cash movements, reporting, reconciliations, and the custodian's responsibility to protect client assets and operational accuracy. A custodian safeguards client assets and supports the full post-trade lifecycle. In operations, I would focus on settling trades, maintaining accurate positions, collecting income, processing corporate actions, reconciling cash and securities, and providing client reporting. For example, if a pension fund buys equities, the custodian ensures securities are received, cash is paid, and the books reflect the correct holdings. The key value is operational control, asset protection, and timely servicing. Question 2. Walk me through the trade settlement lifecycle from trade execution to final settlement. The interviewer is testing your understanding of post-trade processing, matching, confirmation, settlement instructions, market cutoffs, cash and securities movement, and how operational teams monitor exceptions. Make sure to cover trade capture, validation, instruction generation, matching with counterparties, settlement through depositories or agents, cash funding, fail monitoring, reconciliation, and client communication. After a trade is executed, trade details are captured and validated against client instructions, security data, settlement location, value date, and counterparty details. The custodian sends settlement instructions, usually through SWIFT or local market channels, and the trade matches with the counterparty. On settlement date, securities and cash move simultaneously, where delivery versus payment applies. Operations then confirms settlement, updates positions in cash, investigates exceptions, and escalates any fails before client reporting. Question 3. What is delivery versus payment, and why is it important in custody operations? This question evaluates your knowledge of settlement risk reduction, cash versus security exchange, market infrastructure, and why DVP is preferred over free-of-payment settlement in institutional custody. In your answer, talk about simultaneous exchange, principal risk, settlement finality, DVP versus FOP, central securities depositories, and how custodians monitor mismatches or partial settlements. Delivery versus payment means securities are delivered only if the related cash payment is made, and cash is released only if securities are received. It reduces principal risk because neither side gives up value without receiving the other leg. In custody, DVP is critical for equities and bonds because clients rely on the custodian to settle safely. Free-of-payment transfers can still occur, but they need stronger approvals since securities move without a cash exchange. Question 4. How would you investigate a failed trade settlement? The interviewer wants to assess your practical exception handling approach, ability to identify root causes, coordinate with counterparties, manage market deadlines, and reduce client impact. Be sure to mention checking trade economics, SSI, cash availability, securities availability, counterparty matching status, market holidays, cutoffs, escalation paths, and clear documentation. I would first identify whether the fail is due to unmatched instructions, insufficient cash, lack of securities, incorrect SSI, market restrictions, or timing issues. Then I would compare our trade details with the counterparty's records and check depository status. If cash or stock is short, I would escalate to the client or relevant team quickly. I would also document actions, monitor market cutoffs, and keep the client informed until the trade settles. Question 5. What are corporate actions? And what is the difference between mandatory and voluntary events? The interviewer is testing your understanding of asset servicing events, entitlement processing, client elections, event risk, deadlines, and the operational distinction between automatic and instruction-based actions. While answering, focus on dividends, stock splits, mergers, rights issues, tenders, mandatory versus voluntary treatment, election deadlines, entitlement calculation, and communication with clients. Corporate actions are events initiated by issuers that affect securities holders. Mandatory events, such as cash dividends, stock splits, or mergers, are processed automatically based on record date holdings. Voluntary events, such as tender offers or rights elections, require the client to provide instructions before a deadline. In asset servicing, accuracy matters because the custodian must notify clients, calculate entitlements, capture elections, submit them to the market, and reconcile the final proceeds. Question 6. How do record date, ex-date, pay date, and entitlement date work in dividend processing? This question evaluates your grasp of key dividend dates, eligibility determination, income accrual, market convention, and how custody teams ensure clients receive correct income. Make sure to cover ex-date eligibility, record date ownership records, pay date cash receipt, entitlement calculation, pending trades, market differences, withholding tax, and reconciliation. The ex-date determines whether a buyer is entitled to the dividend. If you buy on or after ex-date, you generally do not receive it. The record date is when the issuer identifies holders, and the pay date is when cash is distributed. In custody, we calculate entitlements using eligible holdings, including settled and sometimes pending positions depending on market rules. We then book income, apply withholding tax where relevant, and reconcile received cash to expected amounts. Question 7. What reconciliations are most important in custody operations? The interviewer wants to assess your control mindset, knowledge of cash and position reconciliations, break investigation, aging, ownership, and the importance of accurate books and records. In your answer, talk about custody books versus depository, sub-custodian, broker, fund accounting, and bank records. Plus, break categories, materiality, escalation, and resolution tracking. The two core reconciliations are cash and securities positions. We compare internal books against external records, such as depositories, sub-custodians, agent banks, and sometimes fund accounting platforms. Breaks can come from timing, unsettled trades, corporate actions, income, fees, or incorrect postings. A strong process classifies the break, assigns ownership, tracks aging, and escalates material items. Accurate reconciliation is essential because it supports NAV, client reporting, risk controls, and asset protection. Question 8. How would you handle a client query stating their holdings report does not match their investment manager's records? This question evaluates your client's service judgment, investigation structure, reconciliation skills, communication discipline, and ability to resolve differences without making unsupported assumptions. Be sure to mention gathering evidence, comparing as-of dates, settled versus traded positions, corporate actions, FX, pending trades, report timing, root cause explanation, and professional client communication. I would first confirm the report date, accounting basis, account scope, and whether the client is comparing settled or trade date positions. Then I would reconcile the disputed security against internal custody records, depository records, pending trades, and any corporate action activity. Many differences come from timing, unsettled trades, or recently processed events. I would explain the root cause clearly, provide supporting evidence, correct any internal error if found, and confirm preventive steps. Question 9. What controls would you expect around voluntary corporate action elections? The interviewer is testing your awareness of high-risk asset servicing processes, client instruction controls, maker-checker review, deadline management, and potential financial loss from missed elections. While answering, focus on event validation, client notification, election capture, authorized signers, dual control, deadline tracking, market submission, confirmation, reconciliation, and audit trail. Voluntary events need strong controls because a missed or wrong election can create direct client loss. I would expect verified event setup, timely client notification, clear deadline tracking, authorized instruction validation, and maker-checker review before market submission. The team should confirm instructions were accepted by the agent or depository, reconcile final proceeds, and retain a complete audit trail. Exception reporting is also important for clients who have not responded before the internal deadline. Question 10. What is the role of SWIFT messages in custody and settlement operations? The interviewer wants to assess your familiarity with industry messaging standards, settlement instructions, corporate action notifications, confirmations, cash statements, and operational automation in custody environments. Make sure to cover common message purposes, standardization, straight-through processing, settlement status, corporate actions, cash reporting, exception reduction, and the need for accurate static data. SWIFT provides standardized messaging between custodians, brokers, depositories, banks, and investment managers. In settlement, messages can instruct deliveries, receive securities, confirm settlement status, or report failures. In asset servicing, SWIFT is used for corporate action notifications, elections, and confirmations. Cash statements and balance reports also flow through SWIFT. The benefit is straight-through processing and fewer manual errors, but it depends heavily on accurate standing settlement instructions, account setup, and reference data. Question 11. How do standing settlement instructions affect custody operations? This question evaluates your understanding of static data quality, settlement routing, counterparty matching, failed trades, operational risk, and the importance of maintaining accurate client and market instructions. In your answer, talk about account numbers, depository codes, local agents, cash instructions, market requirements, validation, change controls, and the impact of incorrect SSI. Standing settlement instructions tell counterparties where and how to deliver securities or cash for a client's trades. They include custody account details, depository identifiers, local market agent information, and sometimes cash correspondent details. If SSI data is wrong or outdated, trades can mismatch or fail, creating funding issues and client dissatisfaction. That is why updates should follow controlled validation, maker-checker approval, effective dates, and communication to brokers or investment managers. Question 12. Explain withholding tax in the context of income processing for global custody clients. The interviewer is testing your awareness of cross-border income processing, tax relief mechanics, treaty rates, documentation requirements, reclaim processes, and how taxation affects client entitlements. Be sure to mention gross income, tax withheld at source, treaty eligibility, client documentation, relief at source, tax reclaim, market-specific rules, and reconciliation of net proceeds. When a client receives dividends or bond interest in a foreign market, tax may be withheld before the custodian receives the cash. The final net amount depends on local law, treaty rates, and whether the client has valid tax documentation. Some markets allow relief at source, while others require a tax reclaim after payment. In operations, we must calculate expected gross and net income, monitor documentation, reconcile received cash, and support clients with reclaim submissions. Question 13. What key risks exist in custody operations, and how would you mitigate them? The interviewer wants to assess your risk awareness across settlement, cash, corporate actions, reconciliations, data, fraud, regulatory obligations, and your ability to propose practical controls. While answering, focus on operational loss, missed deadlines, settlement fails, incorrect payments, reconciliation breaks, unauthorized instructions, segregation of duties, maker-checker controls, escalation, and incident management. The main risks are failed settlements, incorrect cash or securities postings, missed corporate action deadlines, stale static data, unreconciled breaks, and unauthorized instructions. I would mitigate them through maker-checker controls, daily reconciliations, exception dashboards, deadline calendars, approved instruction channels, segregation of duties, and timely escalation. Root cause analysis is also important after incidents. A good custody team is not just processing volume, it is protecting assets while maintaining accurate books and client confidence. Question 14. How would you prioritize work on a high-volume day with settlement breaks, corporate action deadlines, and client queries? This question evaluates your operational judgment, time management, risk-based prioritization, deadline awareness, communication style, and ability to stay controlled under pressure. Make sure to cover risk ranking, market deadlines, monetary impact, client sensitivity, regulatory or contractual SLAs, escalation, teamwork, documentation, and avoiding rushed errors. I would prioritize by risk and deadline, not simply by order received. Same-day market deadlines, high-value settlement fails, and voluntary corporate action elections would come first because missed action can create irreversible loss. I would then handle aged breaks and client queries based on materiality and SLA. I would communicate capacity issues early, ask for support where needed, and keep an action tracker so nothing drops. Speed matters, but controlled execution matters more. Question 15. Which metrics or KPIs would you use to assess the performance of a custody operations team? The interviewer is testing your ability to connect operations activity with measurable performance, risk control, client service quality, process efficiency, and continuous improvement. In your answer, talk about settlement rate, fail aging, reconciliation break aging, corporate action timeliness, income accuracy, query turnaround, SLA adherence, error rates, and root cause trends. I would track settlement efficiency, failed trade aging, cash and position break aging, corporate action election timeliness, income payment accuracy, client query turnaround, SLA adherence, and operational error rates. The best KPIs show both volume and risk. For example, a high settlement rate is good, but aged high-value fails may still indicate serious exposure. I would also review root cause trends so the team can fix recurring issues rather than repeatedly clear the same breaks. If you are still with us, congratulations! You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.